We're back on income statement. An income statement communicates information about a business's financial performance by summarizing revenues, you raise expense over a period of time. Revenues are created when business provides products or services to a customer in exchange of any assets. Assets are resources resulting from past events and from which future economic benefits are expected to result. Example of assets include cash, equipment, and supplies. Assets will be discussed or are taken as resources resulting from what? From past events and from which future economic benefits are expected to result. Remember, we take assets for sales purpose. Example of assets include cash, equipment, and supplies. Remember, assets will be discussed in more detail later in the chapter because we will be dealing with assets, their depreciation, their acquisition, initial recognition, subsequent measurement. Expense are the assets that have been used up or the obligation incurred in the course of earning revenues. By earning revenue, there is a sacrifice. The sacrifice of earning revenues is are expenses. When revenues are greater than expenses, then the difference is called the net income or profit. When expenses are greater than revenue, a net loss results. Consider the following income statement of Big Dog Coworks Corporation. This business was just started on January 1st, 2023 by Bob Big Dog. In order to repair automobiles, the main purpose of the business was to repair automobile or is to repair the automobile. Yes. Now, all the shares of the corporation are owned by Bob. He is the owner of the business 100%. At January 31st, the income statement shows total revenue of 10,000 US dollar and various expense to totaling to 7,800 US dollar were realized net income. Net income, sorry, the difference is between 10,000 US dollar of revenue and 7,800 US dollar of expenses. The difference is 2.2 thousand US dollar. Now we can see them. Let us look at this working example because we will illustrate them later on by providing a future picture by picture on income statement and balance sheet as well. Now, for the month ended January 31st, that year, revenue, uh, remember, we have seen that the revenue recognized were 10,000. Now, but we had incurred some expenses. Within this 780, we have rent expense, salaries, suppliers expense, fuel expense, all totally to 780. I will provide you with an Excel. Let me check whether you do have a Excel. Do you have Excel? Do I? Do I? Do I Excel? Do I have Excel? Do I have Excel? Do I have Excel? Oh. Now, but no problem. We'll continue. We'll be continuing. No problem. We will be continuing seeing them by will share you in on our WhatsApp group. I will share you Excel on WhatsApp group so that any one of you can just use the template to compute himself in workings. Now let's move on. Big Dog Core Works is income statement is presented here. Revenues, repair, go to 10,000 shade. Revenues, expenses are detailed as well. Now, remember, income statement. What is income statement? The income statement of changes we represent what changes have occurred. Remember, we start by income statement always, but which now provide the changes in equity. Remember, the statement of change in equity provide information about how the balance in share capital and retained earnings changed. We start by income statement, then we provide changes in equity. Yes, because what make changes there comes to changes in equity. You may start by changing equity or balance sheet, but better you start by balance sheet or in equity, but no problem wherever you can start. The statement of change in equity provide information about how the balance in share capital and the retained earnings changed during the period. Yes. Okay. The statement of change in equity, yes, do that. Equity section of the balance sheet and it represents how share capital is a heading. You see, share capital is a heading in the shareholders equity section of the balance sheet and represent how much shareholder have invested. And when a shareholder buys share, they are investing in the business, of course. The number of shares they purchase will determine how much of the corporation they own. The type of ownership units purchased by the big dog is shareholder is known now as common shares. Yes, because we don't have preferred shares, and he is the only one who owns the business. The type of ownership unit purchased by big dog as a shareholder is known as a common share. Other type of share will be discussed there, as I say, the preferred premium share. We will be talking in later chapters. When a corporation sells its shares to shareholders, the corporation is said to be issuing share to shareholders. That is normal. Yes, we are showing, and we see the transactions come in later on. This section, we will see this transaction what they are traded. In the statement of change in equity shown below, share capital and retained earning balance at January 1st are zero because the corporation started the business on that date. During January, share capital of 10,000 US dollar was issued to shareholders, so the January 31st balance is that amount as well. Retained earning is the sum of net income earned by a corporation Have to consider this. Yes, have to consider this. Um, and ensure that they are very clear. Mhm. Then at the earnings, yes, shareholder generally have the right to share in dividend according to percentage of their ownership or degree of ownership to demonstrate the concept of retained earning. Recall that Big Dog has been in the business for 1 month only, in which 2,200 of the net income was reported. Additionally, 200 of dividends were distributed. So these are subtracted from retained earnings. Because when we will pay the amount which we have pay a dividend will be subtracted in net income. We have produced it, but within that interest, we have to pay they were to those shareholders. As accountant, we have to ensure that we have subtracted them in the net income so that you will not transfer them in the balance sheet. That's why you better prepare statement of change in equity after you prepare balance sheet. You understand? Now, statement of change in equity for the month will be represented as here as well. Net income, we have 2,200 minus, you see that way we subtract here. Yes, ensure that the heading shows the name of the entity, the type of financial statement, and the period in time date. Should be very clear, illustrated here, so that everyone can understand it clear without changes or without doubt. Your statement, is it really accurate? Is it really clear, concise, and to the point, so that everyone can understand it? Now, net income is 2,200. Dividend is 200 US dollar. Ending balance. Now you see that here, in ending balance, we remain only with 2,000 net profit. It has retained earnings that will be transferred in where? In equity. You see, on another side here, on total equity, that shows the equity will remain with the only 2,000. Yes, we subtract also there. Because total equity represents each transaction. I will demonstrate to you how every transaction affect the total equity. Because every single transaction in the business, either income, either expense, affect the total equity. Under no circumstance, this change should be appearing, should happen. When a single transaction, even $1 is either enter the business or out of the business, total equity affected, a positive or negative. To demonstrate how retained earnings would appear in the next period, let's assume that Big Dog reported what how retained earnings would appear in the next accounting period. Let's assume that Big Dog reported a net income of 5,000 US dollar for February and dividend for 1,000 US dollar were given to the shareholders. Based on this information, retained earnings at the end of the February would be 6,000, calculated as the 2,000 US dollar January 31st balance plus the 5,000 got in February. Net income less the 1,000 February dividend. Remember that we have to subtract. The balance in retained earning continues to change over time because of additional net income, losses, and the dividends. My friend, let's continue on the balance sheet. The balance sheet or statement of financial balance sheet is the old version. In the new, we say statement of financial position. Balance sheet is not updated. It's old version. It shows the business's assets, liability, and equity at a point in time. By saying a point in time, every given mentioned period of time. The balance sheet of Big Dog Corp at January 1st, 2023 is shown below. Now look at the way it is. Assets Assets, we have those assets, cash. Yes, we have account receivable, prepaid insurance, equipment, and truck. Uh, Coming to asset, those three first assets, those are current assets. Yes. Cash, account receivable, prepaid insurance are current asset. Equipment and equipment as well. But truck is a fixed asset. Now you see that total asset now it comes to 19,100,000. Well, 19,100 US dollar. Coming to the liabilities, under side of liability and equity, we have RON, account payable, and earned revenue, total liabilities, which is equal to 7,100. Because we have all of those elements, what we can analyze each and find it the way it is. Yes, you see. Let us, for example, look at and analyze the profit. An earned revenue is well known as the unrealized profit. We have account payables. Yes. Now, we will see, I will be showing you every working cost. This is one. You see now, equity, share capital is 10,000 US dollar, retained earnings is 200. And total equity is the 12. Yes, share capital plus that and the revenue. Remember, we had 2,500, but we have subtracted 2,200. Yes, you see. But we, by coming net income, we reduce this dividend and only take 2,000. Now, you have seen now, we can say what is assets? Assets are economic resources that provide future benefits to the business. Examples include cash, account receivable, prepaid expense, equipment, and a truck. Cash is the coins and the currency usually held in a bank account and is a financial resource with future benefit because of its purchasing power. Account receivable represent amount to be collected in cash in the future for goods or sold or service provided to customers on credit. Prepaid expenses are assets that are paid in cash in advance and have have benefits that apply over future periods. For example, a 1 year in insurance policy purchased for cash on January 1st, 2023 will provide a benefit until December 31st. So it's a prepaid asset. The equipment and the truck were purchased on January 1st and will be provide benefits for and beyond. So our assets, because it was purchased, but it have future benefit. It is already an asset. Now, what is the liability? After understanding asset, what is the liability? A liability is an obligation to pay assets in the future. For example, Big Dog's bank loan represents an obligation to repay cash in the future to the bank. Account payable are obligation to pay a creditor for goods purchased or service rendered. A creditor owns the right to receive payments from an individual or business. An unearned or unrealized revenue represent an advance payment of cash from a customer for big dog service or products to be provided in the future. Unrealized profit, it will be removed from the profit because we have not already realized there. We have served something, but not get that thing. We will see them in practice. Yes. What is now equity? Equity represents the net assets owned by the owner, the shareholders owners are shareholders. But here remember, we have only one person as 100% shareholder. Net assets, but in the ceteris paribus, are the shareholders, the set of shareholders, they are the owner, and we will see the how the business is being managed. No, it's clear. Net assets are assets minus liabilities or less liability. For example, in Big Dogs January 31st balance sheet, the net assets are 12,000 US dollar, calculated as total assets of 19,100 US dollar minus total liability of 7,100 US dollar. This means that although there are 19,100 US dollar of assets, only 12,000 US dollar are owned by the shareholders, and the balance of 7,100 are financed by debt. Because we have a debt. Notice that we will see in the practice. Notice that net assets and total equity are the same value. Notice that net assets and the total equity are the same value. Both are 12. Equity consists of share capital and retained earning. Share capital represents how much the shareholder have invested in the business. Yes, retained earning is the sum of all net income earned by a corporation over its life, less any dividend distributed to shareholders. In our case, we have we have raised how much to 200 US dollar. In a summary, the balance sheet is represented by the equation, which is assets is equal to liability plus equity. Most of the people think that it is easier, but it's easiest comes in practice, not in the formula. Assets are the investment held by business. The liability and equity explain how the assets have been financed or funded. Assets can be financed through liabilities, also known as debt or equity. Equity represents the amount that are owned by the owners. In the simple, the shareholders and consist of share capital and retained earnings. Investments made by shareholders, namely share capital, are used to finance assets and or pay down liabilities. Additionally, retained earnings comprised of what? Of net income less any dividend. Remember, it represents a source of financing. This should be clearly understood. Now, let's come to the cash statement of cash flow. Our last statement that we are going to see before we go in practice is a statement of cash flow. Cash is an asset reported on the balance sheet, ensuring there is sufficient cash to pay expenses and liabilities as they come due in is a critical business activity. Remember, the statement of cash flow explain how the balance in cash changed over a period of time by detailing the sources or inflow and use outflow of cash by type of activity. Remember, we have operating, investing, and financing activities. As these are the three types of activity a business engaged in on read this. Operating activity are the day-to-day processes involving selling product and or services to generate income, net income. Now, example of operating activities include the purchase and use of supplies, yes, paying employees, fueling equipment, and renting space for the business. Those are the operating activities. Investing activities are the buying of assets needed to generate revenues. For example, when an airline purchases airplane, it is investing in assets required to help it generate revenues. Now, financing activities, here we have there are the raising of money needed to invest in assets. Yes. Remember here, you can start by financing or you can finance later. We will see. But critically, we have to start by operating. Now, I will show you in the table below. Financing can involve issuing share capital, getting money from the owners, known as shareholders, or borrowing. Yes, let us see in this figure so that we understand this. Let us this figure, then we close. We come in the next session in practice. Yes, cash flow resulting from operating activities can be reinvested in. Yes. Now we start. You see, there is operating activities. Here in the operating activity, we create net income, we create revenue, we create wealth. In other words, what does wealth comes to do in a business? They come to invest. They should always come for the purpose. Operating activity help investment, but financing activity also help both operating and investing in one way or another, but they correlate each other. But you can't start by investing. No, you can't buy. You can start by investing. You can start by financing, but you can't operate without those two. The operation depends on investing. The investing may depend on financing. In other words, cash flows resulting from operating activity can be used to pay down. Yes? Yes. After starting your business, the wealth you created can be used to finance. Yes. Now, cash flow resulting from financing activity can be used by buying assets. Yes. We lend money to people. We buy government bonds, whatever bonds. Yes. Now, after getting these funds, you can invest in. Yes. They correlate each other. Now, allow me to end this session by here after understanding the principles, the cash flow, the statements. Now, in next session, we will be standing on the financial statements. Let me stop here this session today. And now, to us, that the session is normally it takes normally for you to relax and even me no more than 30 minutes. Let's by end here. Now we come in the last session of the chapter 1 for understanding the practice example in this chapter.